Welcome to the London Business School webinar series, Beyond the Crisis. I'm Julian Birkinshaw. I'm your host for this series where we're looking at the big challenges and opportunities as we navigate our way out of lockdown. Today's webinar is in fact the 20th in our series. If anybody's seen all 20, you deserve a medal. Today we're going to be talking about how not to waste a crisis, sources of entrepreneurial opportunity, and startup financing. And to discuss this fascinating topic, two colleagues. First of all, Rupert Merson, who's an adjunct professor of entrepreneurship and strategy at the school. Welcome, Rupert.
Thank you, Julian, and welcome to you, and good morning, good evening, good afternoon to everybody else around the world.
Thanks so much, Rupert. And also joining us is Luisa Alemany, who is an associate professor of management practice in the same department of strategy and entrepreneurship. Welcome, Luisa.
Thank you, Julian. And good morning, everyone, or good afternoon as well, wherever you are. Thank you.
Thanks. So without any further ado, I'm going to hand over to Rupert to get us started. Rupert, the floor is yours.
Thank you very much, Julian. And may I be one of the first to congratulate you on today's announcement, your election to the Academy of Management, which is a considerable honour, and a first member of London Business School faculty to be so honoured. So well done, Julian.
Thank you.
For my part, I'm at the other end of the faculty at London Business School, but it's my pleasure nonetheless to explore this particular theme with you with the help of Luisa. Luisa, a little bit later on, is going to be digging into the research and the models and the Greek letters and the formulas and the graphs. I'm going to talk more generally about how not to waste a crisis. And in so doing, the first thing I want to observe is I've got no intention of underplaying the seriousness of the current crisis. There is perhaps a view out there that our title is unduly flippant. I don't think it is. It is important that we all acknowledge that this is a difficult time for all of us. We all know people who are suffering personally, have suffered personally, have recovered, and in some instances have not recovered. And our thoughts and prayers are with everybody. But part of the entrepreneurial mindset is to look for the silver lining to every particular cloud. And that is our particular subject here, how not to waste this particular crisis, to look for the opportunity. This is what entrepreneurs do. Of course, in looking for the opportunity, entrepreneurs look for the specific and the particular rather than look for the general. And I've been rooting around looking at particular instances of pandemic experience and how businesses have been reacting. And I share this almost at random, really, from Little Rock, Arkansas, over in the United States, made famous by Bill Clinton, of course. But here we're looking at the effect of the pandemic on merchants and businesses in Little Rock. Merchants in Little Rock say their business has declined 40%. Others estimate the decrease at 70%. So much for the accuracy of research there, of course. The retail grocery business has been reduced by 1/3. One department store is not doing more than half of normal business. Increase in demand for beds. Well, some people are doing well out of it. The only business in Little Rock in which there has been an increase in activity is the drugstore. Presumably the drugstore is also selling beds. Little Rock businesses are losing $10,000 a day. This is actual loss, not a decrease in business, but this is stuff that's never going to come back again. Of course, $10,000 a day, it's not a great deal, is it really? But when we're considering entrepreneurship, we need to read between the lines and exercise our imaginations, and also read the small print, can I suggest? And if you have read the small print at the bottom of the page here, you'll see that this is from a paper, a very good paper, published in 2007, making some observations about the flu pandemic of 1918-1919. It might seem quite familiar to us in 2020, of course. 1919 flu pandemic has slipped out of the historical consciousness, been brought back by a few books and documentaries recently, but it's interesting to see how much we have forgotten about it. Forgotten also about the 2 years or so of recession that followed, hard recession. Forgotten also that 2022 or thereabouts was the beginning of a major bull run, one of the biggest bull markets in corporate history, modern corporate history. Itself ending, of course, in 1929 with the Wall Street crash, and another crisis of a different sort. Gives us pause for thought, I think, not just about the seriousness of our own times, but also how we have been here before. And not just how we have been here before, but how we get out of this as well. It's important that when we're looking at the current scenario, we think as entrepreneurs and look forward to how we are going to get out of it. I'm interested in the context of that bit of reportage from Little Rock, Arkansas, to see this piece of reportage from the august management at Massachusetts Institute of Technology Review. Headline here, we're not going back to normal. This time is different. There is going to be no return to normalcy as has happened before. Really, I say? Got to think long and hard about this. We're really not going to see a resurgence of where we were before, that the world is now going to be fundamentally different. I'll tell you, part of the entrepreneurial mindset is to look alternatively, have an alternative perspective on what other people are thinking. And for the more of us who are thinking that the world is not going to go back to some way of being normal again, can I suggest that there are just as many entrepreneurs who might well be thinking, hang on a minute, that's going to give rise to opportunities for us, not just in the new and in the changing, but also in the old. Is this well-researched thinking on their part? No, of course not. I draw your attention to the quote from The Economist there. 34% of entrepreneurs pray several times a day compared to 27% of non-entrepreneurs, or perhaps put more charitably, our entrepreneurial friends are exercising their imaginations and relying on non-rational ways of approaching a new sense of opportunity here. For my part, I encourage us to adopt a due sense of perspective. We might be rushing around like Corporal Jones here, shouting at each other not to panic, but all of us are panicking. We are all deeply worried, and rightly so, of course. I'm sure we are looking towards 2 or 3 years of deep recession, but things will change as a consequence of that and during it. I'm minded of 3 instances from my own personal history after the London bombings, July 2005. I remember a student ringing me up. She was supposed to be joining a student group that I was working with at the time at the business school. And she told me, Rupert, my parents have advised me that it's too dangerous for me to return to London to study, so I'm staying here in Rio de Janeiro instead. Really? Rio? Safer than London, I'm thinking? A sense of geographical perspective here. And then 3 years later, another crisis. This is the financial crisis of 2008, 2009. I remember attending an event for investors, lots of venture capitalists milling around, the occasional angel, a few bankers in sober suits. And I remember one VC saying to me, Rupert, Western capitalism is dead. His face was ashen. There were tears in his eyes. I'm looking at buying a farm, he said, in New Zealand, in case we need to return to some form of subsistence living. No? Perspective. Sense of historical perspective. At the time, things are bad. They look bad because they are bad, but we need that sense of perspective. And perhaps in contrast, I recall a dinner many years ago, 1991, another recession, of course, the senior partner welcoming the graduates to the firm. And afterwards, I had a chat with a senior partner and was talking about recruiting staff in times of crisis. And I remember him saying to me, Rupert, as a senior partner, I can tell you I have lived through 7 recessions now. Maybe we get that sense of perspective when we are older. Maybe we get that sense of perspective with a due sense of history. As entrepreneurs, can I suggest we benefit from that sense of perspective as we are looking for the silver linings in undoubtedly dark clouds. The end is not nigh, can I suggest? The end is not nigh. The present is changing, of course. Part of the change, when the dust settles down, is going to be returning to some form of status quo. And there will be lots of opportunities in the old industries, just as there will be opportunities in the new industries. My favorite metaphor for exploring change is the metaphor of the tectonic plates. The Earth's crust sits on tectonic plates, which we know are permanently shifting. They're moving all of the time. They're never still. And occasionally, as they rub up against each other and one slips under the other, it gives rise to an earthquake, a terrible earthquake, a significant human tragedy and a commercial tragedy as well. Occasionally, the gaps would open up and a volcanic eruption will occur. another tragedy for humankind and also serious economic and commercial consequences. Of course, we're seeing the plates shifting at the moment, are we not? The tectonic plates are shifting as a consequence of this particular crisis. And if we can use the labels here on the left-hand side and apply these labels to the tectonic plates in metaphorical terms, it's interesting for us to speculate, to imagine, perhaps to pray along with entrepreneurs as to which of these is going to see the most significant movement as a consequence of this current pandemic. Political consequences, lurch to the left perhaps, or maybe to the right, who's to say? Economic, social demographic changes, intergenerational change here. Technological is always with us in the 20th and 21st century at least. Technological change finally going to have a big impact over the course of the next few years. What about legal and regulatory and environmental? And I'm not just talking the green movement and the ecological, but I'm talking the environmental in the broadest sense. Perhaps we can take the sentiment of the room. Those of you who are out there, let's have a brief poll. As a consequence of the shift, in which two fault lines in particular do you think the best entrepreneurial opportunities will arise? And I give you 6 choices there. They're not random choices. We've used these labels ourselves, many of us, in our strategic planning. You'll be familiar with this particular list. But if I give you 15 seconds or so to put down a maximum of 2 there, just to get a sentiment of the room as to where we think we are going to be going this time as a consequence of this particular crisis, where, in other words, opportunities are most likely to be arising. Okay, that's 15 seconds, I think. Let's get the sentiment of the room. Interesting to see that, isn't it? I had no idea what was going to come up, of course, relatively of the view that there's going to be not so much arising out of political change, not so much out of legal and regulatory change either. The two go hand in hand. Technological change, or technological forces, is where we see that this is going to be our particular source of innovation and change and entrepreneurial opportunity going forward. Social is quite significant, and those of us here in South London who have taken our tour of Tooting Common every day for our health and can maybe sniff the sociological and demographic change in the air, giving rise perhaps to new opportunities. Let me introduce you to one entrepreneur. This is Daniel Szor. I've been working with Daniel on creating a new case study for teaching purposes. We were writing it in the autumn. We finished writing it. We finished telling the entrepreneurial story in January, early February 2020. Or so we thought, of course. Since 2020 February, the world has shifted on again. Why do I want to introduce you to Daniel and Cotswolds? Well, first of all, because I love whiskey as he does. Secondly, because Daniel's business was founded in 2008 off the back of the last big crisis. Going into the financial crisis, Daniel was a hedge fund manager, making a lot of money as a hedge fund trader in the city. As a consequence of the financial crisis, a lot of his significant wealth disappeared as his business went under. What did he do? He created a new business, not in the money markets, but a business in whiskey. So a reminder here that as the fault lines emerge when crises happen, that it's not just entrepreneur opportunities that are created, but entrepreneurs are created as well. Over the course of the next few months, the next couple of years, can I suggest, the markets are going to be flooded with capable, experienced, insightful, intelligent, ambitious people looking to take advantage of the opportunities that are out there. This always happens. And as we were writing this case study or sending it to print for my first class, I saw in the newspapers, on the BBC Online actually, that a story about one maker of spirits who had suddenly pivoted into making gin-based hand sanitizer. And I sent an email to Daniel and said, look, have you seen what other businesses in your industry are doing? And I got an earful from Daniel. There's genuine anger there, not about me suggesting this to him, but about the fact that he had been making gin-based hand sanitizer for at least 6 weeks. And why should somebody else get the glory rather than him when he'd been there already, of course? Doing good for humankind, yes. Helping out in times of need with a very specific issue, yes. Also draws attention to short-term opportunities created by crises. Important opportunities, do good for our common humankind, make some money out of short-term opportunities in terms of crisis as well, but not necessarily sustainable businesses. We need to distinguish between the short-term and the longer-term opportunities. As I've said, some of those longer-term opportunities will mean going back to the old. Some of those longer-term opportunities will be springing out of the new, of course. This is about reacting to change. Entrepreneurs in times of good and times of plenty and bull markets are looking at creating change and persuading customers to change with them. This is about innovation, about persuading, about selling. In times of crisis such as now, can I suggest entrepreneurs are more likely to be looking at anticipating the changes that are consequent on the crisis. They are exercising their imaginations. They are reading between the lines. They are praying in some instances. There's a balance of arrogance and humility here, because what we imagine probably won't happen, but some of it will. And we're going to look back into our experience positively, not negatively, for insight as to where we're going to be going next. We're not trapped in the past, neither are we forgetting it. And then in addition to anticipating change, we're responding to change as well. We can see it around us. It's happening as we speak. As entrepreneurs, we're thinking on our feet. We're looking for the positive in dark times. We're looking for those silver linings on the dark clouds. For us, our glass is half full, not half empty. And we're worried about the quality of the liquid in the glass as well, as we're reading between the lines. We're taking advantage of others' false moves out of opportunity. Some of those false moves might be forced on them by failing businesses and running out of money. But others of those false moves might be as a consequence of us running around and panicking unduly with an undue sense of historical, commercial and geographical perspective. And of course, we're going to be distinguishing between the short term and the longer term. Just a couple of other observations before I hand over to Luisa, who's going to give us the technical stuff. Entrepreneurship, fancy academic word for entrepreneurial activity within big business. Big businesses are facing up to the same crisis as small businesses, of course, and big businesses need to act entrepreneurial, just as entrepreneurs do. But when you are weighed down by your workforce, when you are accountable to your financiers, when you have a sense of duty to your own past, the way that you react to changing circumstances is going to be different. Coping with the short term is what it's about. Already in this series of webinars, we've explored such issues as strategic agility, the connection between disruption and innovation, the importance of sensitivity to the external environment, turning unknowns that are unknown into unknowns that are known so that we can react to them. But can I suggest that at the bottom of this, what we're looking at is something that's beautifully encapsulated by Lampedusa in his wonderful novel, The Leopard. If we want things to stay the same around here, then everything has got to change. But the key thing here is keeping things the same, preserving the status quo. Entrepreneurs don't preserve the status quo, but they are interested in opportunities in the status quo. They're looking to take advantage of both revolution and evolution. They will innovate in the new, of course, but they will also innovate in the old. There are plenty of opportunities in old industries, and there will be going forward as the old order reasserts itself, which it will. We need to be looking at building businesses perhaps on the foundations left behind by those who have chosen to exit or have been forced to exit as a matter of commercial necessity, giving rise to old style opportunities for entrepreneurs to fill. And then, as I say, we need to distinguish between the short term and the longer term as we're looking for opportunities. Entrepreneurs will be looking for short-term opportunities. Let me call that the entrepreneurial turn. It's not the sustainable long-term business, but let's not knock it. Opportunities to make money, opportunities to make a difference in the short term. Good entrepreneurs, of course, will not make the mistake of confusing an entrepreneur turn with a long-term sustainable business, though maybe the long-term sustainable business will come out of an entrepreneurial turn. Perhaps even more interesting is an observation that sustainable business opportunities perhaps are likely to come out of the old world that is now suddenly forced onto steroids. We're looking at change that has been happening for a while, that should have happened years ago, that maybe is now going to happen properly as a consequence of the crisis. And I draw your attention to the online versus face-to-face. Here am I, here's Julian, here's Luisa, talking to you online rather than in a meeting room. I'm minded of a friend of mine who travels every few months to attend as a non-executive director a board meeting in South Africa and then travels back again. Come on, guys, you know, finally we're going to be wising up to whether there are ways of changing that type of business interaction. And of course, we've known that for years, if not decades. This consequent change is likely to make some of those happen in reality, and that's going to give rise to business opportunity. Flexi working is related to that, of course, and the lifestyle choices that are consequent on that. A lot more employers are going to be a lot more generous about flexi working and everything that's consequent on that. And related to that, can I suggest, is new ways of intercompany cooperation. Been fascinating to observe in this crisis, as in previous crises, how organizations have worked together. Competitors have found friends amongst each other, cooperating with each other. The shift in the boundaries between organizations changing, the definition of an organization perhaps changing as we move forward. Taking advantage of some of those changes which have been available to us for decades in a post-internet environment, but which now finally people are going to take seriously. So it's new sustainable opportunities for entrepreneurs. And then other things, the higher education, here we are, London Business School, taking advantage of this. The world will change. We will go back again to some form of face-to-face interaction because we're human beings. And in case you don't notice, there are some things that human beings can only do face-to-face. I think higher education is one of them. Maybe not primary education. We want to get our kids back from under our feet, don't we? So maybe the old order will reassert itself in the old way there. And then we can look at other areas, of course, NHS, primary service delivery. Babylon has been around for a while, but that type of thinking, I'm sure, will be taken a lot more seriously by a lot more stakeholders now going forward, giving rise to a lot more opportunities, both for big businesses, but also in particular for entrepreneurs. FinTech, similarly. FinTech has been with us for a while, but now it will be taken a lot more seriously, not least by the old established organizations, and barriers between them perhaps will be coming down as well. I've run out of time. Time for me to hand over to Luisa, but first of all, let me hand back to Julian. I'll see you guys in a while when it's a Q&A time. Julian?
Perfect. Thank you so much, Rupert. That was terrific. And I've got lots of questions as always, and I will indeed be putting some of them Rupert's way. But before we do so, we're going to give Luisa the floor to talk a little bit more about the sort of the financing side of the world of venturing. Luisa, over to you.
Thank you, Julian. So I'm going to share my screen with the presentation. 1 second. Okay, well, thank you, Rupert, for your introduction to the world of entrepreneurship and startups. And in fact, you were saying that I'm going to show a lot of data and formulas and everything, but hopefully I'm not going to show formulas for sure. I'm not going to show, but there is a purpose, in fact, for all these numbers that I'm going to show. And the main purpose is because I want to have this sense of perspective that you were talking about before. And so during the crisis, what happens? So I want to look at the previous crisis and what happened with venture capital. That's the first point. Then I want to see also how long did it take to recover? Because down, but then we go up. So how long does it take for the recovery? And the third point that I want to look at with this data is whether it was a good time to invest or not. And this is kind of the question that I want to answer. So let me start with asking the people that we have joining in our webinar today, whether they are entrepreneurs. So if maybe we can have the first or the second poll in this case, whether they are entrepreneurs, they are investors in startups, both, they are thinking about becoming an entrepreneur, considering maybe investing in startups, and none of the above. And I want to have a sense of what we have with us. So maybe we can get the results whenever they are ready. We can share the results with the screen and see what we have here with us today. Okay, so we can see that the majority are thinking about becoming an entrepreneur. So I hope that after Rupert explain all the opportunities, and I'm going to talk about the financing. So hopefully after this webinar, many of you will become entrepreneurs. We have some investors in startups and some people considering investing in startups. So hopefully also after I show you the numbers, some people might consider also investing in startups. Let's close the poll and let's start looking at the numbers. So the first thing I want to say is that I'm going to be talking about venture capital because it's the main source of financing for startups. Of course, they are not the only one. Now, there are 3 topics, and if you look at the figure 1, you can see these 3 topics that are very relevant, and I'm going to be focusing on those. The first one is fundraising. The second one is investing, and there are a lot of details, but I'm going to take investing as a whole. And then exit. This is when the investors sell the company and make money. If we look at the figure 2, something that is also very relevant and I want to point out right now is that the money that is fundraised from institutional investors to invest in startups is invested during a period of 5 years. This is a very important point because the money that you get last year, the money that you got 3 years ago is still available to be invested in the future. Okay, so when we look at the numbers, we have to take that into account. And of course, also the investments you do now, you will have 5 years, 6 years to sell the companies in the future. The other point that I want to make is that, of course, there are some recent crises. For example, we can go back to '94 with the tequila crisis in Mexico, but there was not so much data on venture capital at the time. So I'm going to focus on the 2 more recent crises, which is the .com, which was actually affecting directly startups and technology, and then the most recent crisis, the financial crisis. So let's look at fundraising, investing, and exit. And I'm going to start with fundraising, and I'm going to look at Europe and the financial crisis. So I'm going to show you some numbers here of what happened during the financial crisis here. This is fundraising, so money that investors were putting to be invested in startups. You can see 2005 and 2006 were years of, well, in fact, 2006 has been the record even up to today, with 16 billion raised in that year. To have a sense of how much money is that, in Europe, in an average year, the investment is about 5 billion. That's on average. There are years that are, of course, better and others that are worse. So 16 billion means that you have money for several years, at least for 3. Now, if we look at the last years before the crisis, 36 billions were raised from 2005, 6, and 7. So even if the other years, the money was less, that was not a big problem because the money was still there. This is what is called the dry powder in venture capital. Now, if we put this in perspective, this crisis, what we see is that, in fact, the crisis is nothing because the recovery is so huge that you can see that, you feel the crisis, but then, the trend is always increasing. In fact, the growth rate for that period, 2010 to 2019, so the last 10 years, has been 15.5 annually. So that's huge growth for any sector. And if we think about the money that has been raised, of course, in the last 3 years is 27 billion. But let me tell you, even in 2020, even with the crisis, it has been raised 3 billion. And here I have some of the news, for example, in this venture that announced it as we went into lockdown. We were already in the lockdown April 2020. So they announced a fund of 2 billion to invest in European startups, or other funds like Lakestar of $735 million, or also we have Atomico or Bardet. So the money is there. Now what we have to see is what happens with investing, what happens when the crisis arrives. Here I'm going to look quickly to the US because the .com also affected very much there, and then Europe. On the case of the US, you can see that, of course, the .com crisis, and this is investing, the crisis was big, and the numbers from 2000 to 2001 in terms of investing went down almost by half. The financial crisis, we also felt a little bit that But if we look at the perspective, at the long-term perspective of this, which I think is even more interesting, we can see, let me show you here, that the crisis on the long term, you don't even see them. You can see, well, I put them there in the chart. You can see the dot-com crisis and the financial crisis. But you know, the growth of this market is so amazing. And this is for the whole period that you have there. So the 23 years, 97 to 19, 17.5%. This is for the US. Now let's go back to Europe, which is where I am. And here we can see the dot-com crisis was going down. Financial crisis, I put a question mark because actually we didn't saw any crisis in the financial crisis in the investing market in venture capital in Europe. One thing that I want to show also is if you look at the red line, that's the number of deals. So the blue columns is the money, but now I add the number of deals. You can see that the number of deals, even during the dot-com crisis, the number of deals doesn't go up that much. Why is that? Because the difference is that still the same companies are getting money, but they are getting less. And this is why crisis, you know, the companies have to adjust with less money. So you can see here, you know, this trend, and then actually the trend is going up. Now, if we look at the perspective like before, the market after the financial crisis has been exploding, and the growth in terms of money and number of deals, you have some data there, is just unbelievable. I mean, if we just look at the last 15 years, the growth of money invested in venture capital has been almost 20% year over year. And the number of deals is 17%. So something amazing, I think. Now, let's go to harvesting, which is, you know, exiting, selling the companies that venture capitalists need to sell. Now, what happens during crisis is that, of course, it's more complicated to sell your companies. And this is for the US. If we look at the US, most of the exits are through acquisitions. So in blue, we have the acquisitions. In orange, we have the IPOs. And then in green, the buyouts. Buyouts is private equity buying these startups. Now, you can see that most of the exits are acquisitions in the US, and that even with the crisis, the numbers don't change so much. Now, in Europe, the story is a bit different, because in Europe, we depend a lot on buyouts, so private equity buying companies. And you see that the numbers of acquisitions went down and also buyout went down. Of course, we don't have a lot of IPOs in Europe, so you can almost not see the number. Now, what happened is true is that valuations are down. So if you are trying to divest in crisis, I wouldn't recommend you to sell the company now unless you are forced to sell it. What is a good moment to buy. So for those that have investments in startups, maybe it's a good moment to consolidate, or even big companies buying into, because valuations are down, so it's time to buy. And I'm showing you here, for example, you know, the recent acquisitions in tech, and there are lots of them going on. So it's a good moment for this. Now, what I want to go now is into my final poll here, and I want to ask you a question: whether do you think that investing in startups in time of crisis is a good idea? And maybe we can get the poll up. And the answer is yes, no, or really, I never thought about it, I don't know. And I know there are not so many investors, but you know, what is your feeling? Do you think that if you invest now in a company, this is going to be successful or not? This is what I'm looking for. So maybe we can get the results out there and see what the people are telling us. And then I'm going to tell you with numbers, of course. Okay, so 74% are saying yes. That's good. So I hope that some of you maybe after this presentation will decide to support the entrepreneurial ecosystem by investing in some companies. 10% saying no, and then there is also people that doesn't know. So maybe let's close the survey and let's continue. So I'm going to tell you about why I think that investing in startups is a good idea in times of crisis. The first thing is that the founders right now, they are stronger. They are resilient. They know they are in the middle of a crisis. They are not going to spend money in crazy things. They know that cash is king. So these are the best founders that you can get. Then financial plans, of course, they are very adjust. I mean, they are not thinking about growth. They are thinking about how quickly I get to EBITDA positive or to profits, which is something very important when you are an investor. Third thing is that the talent is available now. like lots of people, are going to be, during the crisis, unemployed. And this is a fact. I mean, there's going to be senior management that is going to be available, and that maybe some startups that never thought that they could hire people like this are going to be now able to hire very senior people in their teams. Valuations are low, so for investors, this is a good thing, not so good for entrepreneurs. And finally, if you invest now, when the cycle is down, in 3-4 years, which is when you are planning to sell, the economy is going to be going up, and that will affect your valuation, and therefore it's going to be high. So that's really, really good news. Now, I'm going to share with you some numbers, because of course, this is my opinion, you can say, but I'm going to show some numbers. First thing that I want to show with you is this analysis that was done by Atomico and Slash in a report that they publish annually, where they basically look at, if we look at the first column here, we have from the different years, 2009 to 2013, from 100% of a startup that raised seed capital, so the very beginning capital to build the prototype, how many of them made it to the next round of financing? And the next one is the Series A. Now, as you can see in crisis, so 2009, well, hopefully you can see it, 33% made it to the next round. If we look at the current data for 2013, we see that only 21%. So the survival rate, this is telling us how many companies survive, because the ones that don't raise more capital, they die, they are losing money. The survival rate in a year of crisis is 33% compared to a good year, which is 21%. So that's a number. The other number I want to show you, which is very important, is the return that investors are getting in venture capital in their funds during crisis time. And this is something that, this is for the UK venture capital funds, and this is a report from the British Venture Capital Association. This, every column here is the vintage year. What does it mean, vintage year? It means the year that the fund started investing. So you can see that the funds that started investing in the tequila crisis, 1994, made almost 35% IRR, and this is annually. So during a period of 10 years, they have made this 35% IRR. If we look at the dot-com crisis, 2001, also very healthy 25% IRR, and the financial crisis is a bit lower, but still is one of the highest years, as you can see from the chart. Of course, you need to be very brave to invest when the world is falling apart. But the numbers are telling us we should be, investing in this year. The government on top is supporting startups, so there is money there for co-investment. So if you are an investor in a startup, you can apply different countries. We have right now 5 countries in Europe that are supporting startups. If somebody is interested, maybe we can go and talk about this later during the Q&A. Happy to go over that later. Other people that know that this is a good time is the business angels. And this is news from this week. I mean, business angels, they are investing. 7 out of 10 say they are still investing. And of course, venture capital, as I showed you before, is investing. And we from LBS, we really believe in entrepreneurs, and we are supporting the entrepreneurs. We have this initiative that we launched from the Institute of Innovation and Entrepreneurship with my team. And we have done this LBS Resilient Founder Series. I'm doing a little bit of advertising here, but it's very interesting that people that have been through crisis before share their experience and tell other entrepreneurs how to get out, and also to identify new opportunities. And with that, I want to just finish by telling you that there were some very famous startups, and I put here only the famous one. There are others that are also very important, but maybe they are not so famous, that were made in crisis. And probably our life without some of these companies will be very complicated, especially if we think about WhatsApp these days. But not only in the previous crisis. For example, Disney or HP or Microsoft were started in crisis. And Netflix, which was not started in a crisis, almost closed down in 2001. So thanks God they are still there, because otherwise our lockdown would have been much more complicated. And with that, I'll finish my presentation. So I'm going to pass it to Julian for the Q&A.
Thank you, Luisa. That was terrific. And I love both of your senses of optimism. I guess if you're going to teach and be an entrepreneur, you've got to be an optimist. But in both cases, we've got a refreshingly positive message. So lots of questions as usual. There's some 1,200 people on this, and we've got at least 60 questions. I'm going to start with Rupert, but these are questions, Luisa, you may well want to chip in on. So Rupert, you talked a lot about where some of those opportunities might lie. Do you have any sort of processes or frameworks to follow? I mean, it's easy to say be a contrarian, but of course that's not a structure. That is just a mindset. There's a couple of people saying, help me to figure out how I can be a bit more structured in my thinking. At the moment, you're on mute, Rupert, so please unmute yourself before you say
I've unmuted myself, Julian. Very interesting observation, particularly for those of us in the business school, which is a school of social scientists, after all, where we're encouraging ourselves to be rational and to follow frameworks and look for methodologies and look for frameworks to add insight to our decision-taking processes. Part of the problem with entrepreneurship in business schools is that entrepreneurship in many ways responds to imagination, to reading between the lines, to the contrarian thinking, to moving away from the average. Many business frameworks and decision-taking structures take us, for example, towards the average and attempt to draw conclusions from that. But we all know that the average doesn't exist in reality. The reality is all about a whole host of particulars and peculiars. Entrepreneurs trade in particulars and peculiars that the frameworks ignore, or rather marginalize and push to the outside, rather than those opportunities that are stuck there on the average. So how would I answer this question more usefully? I would say, if you are going to reach for a framework, make sure that you've got a fistful of them rather than one. I think that the best way of using the frameworks is to get them to stimulate questions and stimulate thinking rather than looking to provide an answer. And there are as many frameworks out there as there are business schools that teach entrepreneurship and entrepreneurs who have been successful. And from that range and variety of framework, we are going to see some sense of idea come through. The second thing and last thing I observe here, of course, is not to forget those tools and techniques that don't lie on frameworks. And I go back to imagination, reading between the lines. We want to look for the thoughts that other people don't think, not the thoughts that everybody thinks as well as we do.
Good. And I want to follow on that and then Luisa jump in. It was interesting that people said technological opportunities are the greatest source of entrepreneurial ideas. And yet, of course, that was true way before the current crisis. So does that mean that we should be, as entrepreneurs, we should be actually just sort of keeping them doing what we were already doing? Or do you almost see this as an opportunity for us to, to try to figure out on some of these more social opportunities which are arising uniquely because of the crisis?
Julian, I'm an entrepreneur. I advise entrepreneurs. I'm an optimist, so I'll say yes and yes. We need to be looking at old industries. I think these are too often ignored when we're exploring entrepreneurship. We get het up with technology. We get het up, frankly, with the things that VCs are interested in, and they're often not interested in old industries. We need to look there as well. But let's not, of course, ignore the changing picture. I'm just trying to put different thoughts in people's minds as to where those opportunities might lie.
Luisa, any thoughts on that? And you're on mute as well. In fact, just unmute yourself.
Yeah, well, I mean, we have seen that the impact investment market has been growing a lot in the recent years. And of course, there might be a lot of opportunities now in social. What I think is that, of course, healthcare is now booming. That's clearly a market that is growing a lot. But maybe in those markets that are now growing so much, the effect is the opposite, is right. The valuations are too high, so maybe it's not the best place to invest. It might be a good, for the entrepreneurs to start there, but for investors probably it's not so good. But on other sectors, for example, security, cybersecurity, I think is something that for everyone that are, we are all working at home, we need to be dependent on the cybersecurity. So this is super important. And of course, there are many things that we are doing now using the technology. So yeah, I think the purpose and the social arrived before this crisis and is here to stay.
So there was actually a very specific question on that. I don't know if you've got any hard data. Are VCs actually explicitly putting more money into some of these more social enterprise things? I mean, is there some numbers you can put around that?
Everybody's looking at this. Everybody's taking into account the, the purpose and the mission. But I think it's the impact investors that are really focusing on this. Now, what all the venture capitalists have always said is that is really good to invest and make money and make good at the same time. So it's very nice if you invest in clean tech and in healthcare, but there might be opportunities. In fact, you might think that technologies at the end of the day is always good for everyone, you know, all the things that we are doing these days. So yes, I think it's more on the table, but at the end, these investors, venture capitalists, they invest for other people. They are using other people's money and they have to return a nice return.
And another specific question to Luisa, and then I'll go ask a general one for both of you. A lot of people looking at these graphs of dramatic growth in the amount of VC money available. And most people are aware of SoftBank, this $100 billion vision fund. I mean, how much of that is specifically a SoftBank story, and how much is perhaps people riding on the back of that?
I'm very glad that you asked me this question, because I didn't mention, of course, we didn't have a lot of time. It was there, but the data that you are seeing there is no money coming from outside Europe. So it's only European money from European investors. So there is no SoftBank effect on the numbers that I was showing you. Of course, the money that the investors from Europe are raising is coming from all around the world, but this is not SoftBank. So yes, in all this data, there is the effect of some of the big unicorns raising capital, but no the crazy stuff that is coming from the US or Asia. So it's European money in Europe.
Good. Question to both of you. Small companies, big companies, you know, the question to Rupert is, you know, are we seeing all these sort of opportunities sort of happening within firms for the entrepreneurs? I mean, you touched on that. And of course, for Luisa, the question is around corporate venture money as well. So Rupert, why don't you go first?
Not sure where the question is there, Julian. Can you?
So the question is, you focus mostly on the opportunities for independent entrepreneurs. Yeah. If you work for a big company and you want to be entrepreneurial within that company, do you see that same bountiful set of opportunities?
Well, as I was saying in my last two images there, of course, there's entrepreneurs and entrepreneurs are confronting the same set of changing circumstances, yeah. But bearing in mind where they start from, their reaction is likely to be different. Their sense of direction is likely to be different. If you owe a due sense of responsibility, which you do to your shareholders, to your employees, to your management, then you're going to behave very differently if you have none of those things weighing on your shoulders. I suggest that this means that in an entrepreneurial sense, you are going to be looking more at shoring up the old, safeguarding the existing, making sure that you're changing what you're doing at the moment so that you have a future in 5 years' time. Entrepreneurs don't have those intellectual hang-ups, of course, but it's important for entrepreneurs to accept and acknowledge that doesn't mean that they need to be out there thinking thoughts that nobody's ever thought before, because there'll be plenty of opportunities still extant in the old industries.
Good. Luisa, your thoughts on I mean, this data, I guess, in terms of the amount of venture capital money coming from corporates?
Yeah, so that's not included in the data that I saw. But because that in general is separate, the corporate venture capital. In fact, I think we have one of people that have been researching that in our department. Gary Dusnitsky is one of the leaders on research on that topic. And what we have seen in previous crises, I can tell you because I've been looking at the data as well, is that many of these corporate venture funds that start during times of economic boom, they close down. So many of these companies that start the funds, they close down. So there is less money available. But what we have seen also through the data is that some of these corporate venture funds that started many years ago have been stable. So we see that most of the big ones stay during the crisis. New ones that appear, and this happened also in venture capital, newcomers, as soon as the crisis arrives, they get nervous and they close down. But there are, you know, like the biggest companies, I would say, in technology, like, I mean, think about Microsoft, Cisco's, whatever, you know, you name it, or in pharma or in energy, they have these huge funds. And for them, it's a great opportunity because I said before, I mean, it's investing at a low valuation with entrepreneurs that are really, really aware of the situation, that are going to take every euro, every dollar, every pound. They are going to love it. They are not going to be wasting your money. So it's the best opportunity. So for this corporate venture capital, and there are less investors because some investors close down. So there is less competition. It's the time to invest.
Julian, if I may just build on that a little bit. Yes, and let's not forget, not just those opportunities where the interests of entrepreneurs and investors are aligned, but let's not ignore the, can I suggest, majority of opportunities that don't necessarily involve external investment at all. There's business opportunities which are funded by the entrepreneurs themselves or can be bootstrapped. There's a whole host of opportunities out there where that alignment is almost an irrelevance. We shouldn't ignore those as well.
Good. In fact, that was indeed my next question to you, Rupert. Somebody says, I already run a small business, a professional consultancy. I often feel I'm not entitled to call it a startup and get help if I want to start it a different business. How can I clarify my identity for getting funding for a new business?
What an excellent question. Yeah, we've started discussing this already. I think that it's so easy for us to assume that entrepreneurship equals rapid growth, that we can't take ourselves seriously unless we are a unicorn, that we're not serious as entrepreneurs unless we're in technology and have been supported by some Silicon-based venture capital firm. And of course, those are all great opportunities, but the reality of entrepreneurship for 99% of the population of entrepreneurs is very much different from that. And can I suggest that in a post-internet world, the opportunities for making serious money for yourself as an entrepreneur and having a fulfilling time on this planet can also be reconciled with staying small. And there are a lot of businesses that are called thought businesses, such as consultancy firms, from this question, the questioner is based in, where there is no necessary reason for looking for growth as the source of commercial success. I call this the growth imperative, or a lot of people call this the growth imperative. I always think that in a post-internet age, the growth imperative is a lot weaker for many businesses, many modern businesses, thought businesses that are selling their own skills. Conversely, the power of the big thought businesses is significantly the less. You know, the big consulting firms, for example, will see small consulting firms, niche boutique firms, as genuine threats now. I think crises such as the we're in one at the moment will only exacerbate that trend. So I think the first question our question needs to ask him or herself is whether I want to grow at all, whether I need to look to growth or to another opportunity to do what I need to do, what I want to do commercially to justify my existence on this planet.
Good. And there's also, it's not just small is okay, but local is okay, right? Because, you know, you touched on the fact that we've got these global supply chains that in fact, you know, we're going to be having less ability to do that. So small local producers of stuff for supermarkets, for example, may actually be on the resurgence.
Indeed, I think that's very interesting. And of course, we none of us know where we're going to go. I refuse to believe that the trends of globalization are over and done with, and we're now entering a new form of dark ages where we no longer do business with somebody from Southeast Asia. That will return, of course, but I do see some of the opportunities for clever thinking in rethinking that balance, and that might well give rise to opportunities to localize some sources of supply which previously we've taken for granted we're going to get from China or Vietnam.
Good. We're running out of time. Louise, a couple of questions for you. Someone wants you to clarify the logic for why the high survival rates during the crisis. You showed the data that actually businesses get more follow-on funding during a crisis. What was the logic for that?
Well, the logic is what I was saying before, that the founders during crisis, they take the money and they keep it like really, they take a lot of care with the money. While if we go back to 2019, I mean, you were reading this in the press, people were raising a lot of money, they were going crazy, spending the money in advertising, in buying this. And so when the things are going well, the founders are just thinking about growing no matter what. And therefore, if the money, you know, when they finish spending the money, if they didn't reach the milestones, they have to close down. I mean, because they are losing money, startups are losing money. Now, in the crisis, because they are so careful, they don't hire more people, they don't spend more money in advertising that they need, then the survival rate is higher.
Got it. And there was also several people concerned about the fact that the VC money is a function of low interest rates. I mean, obviously low interest rates is part of the story, because there's only so many ways of getting a return if the bank is paying you 1%. So you put your money into venture capital. Any thoughts on that? I mean, obviously, whilst we have low interest rates.
Yeah, I mean, I think that that's not exactly correct.
Okay,
because the people that invest in venture capital first, they have to be, not everyone can invest in venture capital. So you either have a lot of money or you are an institutional investor. And if you are an institutional investor, there is a maximum amount as well. I mean, it's not by law, but there is a recommendation. So for example, to give an idea, pension funds might invest around 10% of their money. So, and that they do it because of diversification, which is something that we know from finance that is good. It's not because of interest rates. So in good and bad times, they have a portfolio of investments and they divide it in different assets. And this is one of the assets, and this is diversification. So I don't agree with that point.
So a final question to Luisa, and then Rupert, if you want to come in with any other random thought before we're finished, you're welcome. Luisa, the question was about the differences in government support for venture funding. You're seeing the question specifically asked about UK versus France versus Germany, but do you have any point of view on, I guess, particularly the UK approach, given that the vast majority of our audience is located here? Do you think the government's doing the right thing in terms of backing?
Yes and no. I think they can be doing better. So, well, the first is the amount of money that they are putting. So some countries are putting more money, which is showing, for example, France, that they really believe in this. The second point is how quickly they give the money to the startups, because if the application process is too long and they are going to spend 1 month, maybe the companies die. And the third thing is this co-investment scheme. So many of the governments are saying, okay, I give you the money, but you have to convince another investor, any private investor, to also put money. So that means that the government is not evaluating the startup, but somebody that is a private investor, maybe venture capital, business angel, or friends and family. They say, I believe in this company, I'm putting my money, the government is putting money. What I like from this idea is that first, somebody is doing a due diligence, and second, the government might get a good return because this money might be converted into equity. So actually, some money will be lost because there is failure rate in a startup, but some of the money of the good startups will be converted into equity, and that will generate more money for the future. The only point regarding the question you asked me for the UK government, because it was announced, the details were announced this Monday, there is a small problem there that I hope they will solve, which is that this money is not compatible with some scheme that the business angels have. And so if they use this money, they cannot use another scheme that is very good for business angels. And I think they should solve this issue. But I mean, I could talk for hours.
No, indeed, but we are indeed right out of time. Rupert, any quick closing comment?
Of course, Julian. I love the way you associate with me with random thoughts. I'm not entirely sure what to make of that, but if I can reach for random thoughts to Charles Dickens talking about another crisis that he was writing about 50, 60 years before, and he observed, if I can get it backwards rather than forwards, it was the worst of times, but it was also the best of times. Season of darkness, but also a season of light. Winter of despair, but the spring of hope. Too easy is for us to think that there is nothing before us. Can I suggest that entrepreneurs, there is everything before us. Everything's to play for, guys. Get out there and good luck.
Thank you. So we will close. Sada, if you could just show the closing slides, please. And this is an award scheme that London Business School runs that Luisa and I are particularly involved in. We call it the Real Innovation Awards, and it's not like any other innovation awards out there. We award the messy realities of the entrepreneurial process. For example, we have the Alexander Fleming Serendipity Award, and this year, for the first time, we have a so-called Innovation in Adversity Award, deliberately for innovations that are happening during this current crisis. So if you have any interest in nominating somebody for that award, please go to that website that's mentioned on that previous screen there, london.edu/Real Innovation Awards, or just send myself or Luisa an email. And before we go, I'd like to just alert you to the next one of our webinars. This one's a bit different than usual. Many of the audience, hopefully most of the audience, will know Sir Jim Ratcliffe is. He's one of Britain's foremost industrialists. He created the company called Eneos. He, for example, owns the the racing team that used to be Sky, which is now Team Ineos. And he's also one of the London Business School alumni and a great benefactor to our school. So we have persuaded him to join us for an hour. He's going to be joining us 1 hour later than usual. So it's 1 o'clock to 2 p.m. rather than the usual 12 to 1. And I've also asked our former dean, Sir Andrew Lickerman, to be interviewing him. So I'll be there, so will Andrew. So Sir Andrew will be interviewing Sir Jim next week on Tuesday. So I hope you can all join us for that. If you'd like to take part, you know the usual place for registering on the London Business School website, london.edu/pandemic webinars. So with that, we will close. Thank you once again to Rupert. Thank you to Luisa.
My pleasure.
Thank you all for joining us. And we look forward to seeing you again on Tuesday at 1 p.m. Thank you very much and goodbye.